it was a brave decision for them to go via direct listing. This was widely expected, but I think this company needed to educate investors. And over the next, call it 3, 6, 9, 12 months, they have their work cut out. They need to educate investors about, are you a services company? Where are you with the transformation from services to product and so on and so forth? As far as the company trying to carve a pathway to profitability, it's going to be a hard one from here on out. They are, I believe, banking on the fact that they have this tailwind from COVID, that more enterprises need data analytics software that Palantir has created. And if that tailwind sustains in the next, call it 6, 9, 12, 18 months, that pathway to profitability is much faster than what Street may be modeling today. I still think in our model, we think this company would probably burn cash over the next, call it 18 to 24 months. Beyond that, it's hard to predict. So from what we know, I don't feel that this company should turn profitability anytime soon. Again, from a gap perspective, I mean to say.
Okay, interesting. Something very interesting happened on its day one direct listing on the markets, Rohit, that I do want your perspective on. The insiders, essentially employees and alumni, found it difficult to sell their shares that they've been holding for a really long time into open trade. And I wonder, that would typically be seen as a red flag, but what's your sense here?
I think this was I would put that as kind of a logistical nightmare for a company and the employees that have been waiting for getting liquidity for such a long time. I remember way back when, on the day of Facebook starting to trade on IPO, there were hiccups and there were delays. So there were Facebook first day of trading wasn't as smooth as people thought it should have gone. Today's trading kind of reminded me of that day. I feel. So almost tomorrow would be the day that more and more employees or more and more insiders would be looking to sell. But tomorrow is the start of a new quarter, and that adds a little bit of extra wrinkle on insiders to sell, given there may be some blackout restrictions that they need to abide by.
No, aside of the trading snag, which I understand, a lot of investors will be looking at an exit option. Just the fact that so many insiders are looking to cash out, does that not worry you?
They have been very patient for so long. I think I don't blame them. They have been waiting for liquidity for such a long time. I feel that's a risk of pursuing a direct listing. There is no supply constraint, so probably the stock stays weak over the next, call it 5 to 10 days, and then we find more incremental buyers for the initial wave of supply to start to fade. As such, we saw similar trading trends in Spotify and Slack, which went public via direct listing. So I feel there would be some weakness in the stock in the first, call it 3 to 5 trading days, and then probably more incremental buyers would be willing to step in.
Right, Rohit, we are racing towards a hard break. So very quickly, on the upside for the stock from here, given all the projections you have on profitability.
We put out like a initial fair value estimate around $14. So that's where I feel in the next call it 3 to 6 months the stock should trend towards. But probably in the next 5 days we are going to see more weakness.